So as we get into our index futures, we have three different asset classes, right? We have index futures, we have currency futures, we have metals futures, we have interest rates, we have agriculture, and we have energy. Right? So these are a ton of different assets that we can play, right? We can play ES, we can play MES, right? These are all index futures. But then we can also play the dollar. You know, you can play Forex, you can play the pound, you can play metals, right? Which is like gold, gold mini, silver, silver minis. You can trade interest rates, right? We can trade bonds, T-notes, 10-year T-notes, right? We can trade agriculture, corn, wheat, or energy like crude oil, mini crude, natural gas, which has been really hot during, pun intended, during the wintertime, and all of these different things, right? So in order to know which future we're going to trade, you'll have a month and a year code. This is the easiest way to figure out what contract you need to trade. Now, this is the one part where things get a little confusing. Fortunately, and I'll just kind of show you this on TradingView, for instance, is a good example. It's a little more confusing on DOS, but like in TradingView, if you put MES1 and exclamation point, TradingView will always route you into whatever the front month is, right? So ES is here, NQ is here, RTY is here, YM is here, MBT is here. So if you put that in there, you don't have to worry about actually going through. It'll do the heavy lifting. Like right now I have MES on, and you'll see here on MES, right? Yeah, the continuous contract, exactly, Oliver. You'll see here it says MESH 2026, right? So MES 20H 2026, right? So H is the March contract, right? So that's how we know we're expiring in March, right? The H contract, since we're expiring in March. Now our major indexes only expire quarterly. So we have a March contract, we have a June contract, we have a September contract, and a December contract. So when we roll over, help me out here, people, which contract are we going to be using next? The M contract. Thank you very much. So we only really have to worry about having the H contract, the M contract, the U, and the Z. Right? So, and then we can, and then, so you have your ticker symbol, right? That's your ticker. It has its expiry month, and then it has its expiry year, right? So ours is MESH 2026. So we know that that's the micro E-mini S&P future, and it's the March contract for 2026. So when we roll over, we will be on MES M 2026. Make sense? Anybody not understand how the month codes work? Now, remember, certain months like Crude, for instance, those actually expire every single month. So you will see on certain ones like Crude, you'll actually say, like Crude right now says CLJ 2026. So every month we roll over into a new contract on Crude. So when I'm talking about rollover, right, and that's what I'm saying, some of them like metals, right, or Crude, trade in 1 month expiry cycles. Each month trading code goes like that. Certain ones like ES and NQ are quarterly, right? So, and that's why we have to worry about the expiration. The front month is the month that is nearest to expiration. So whenever we're trading on what we say is the front month. And that's kind of like saying I'm trading a stock ticker or an option, and I'm trading 0 DTE, right? We're basically trading whatever the contract is, the closest contract that's going to expire, because that has the most volume and it has the least amount of decay. Right? You could technically, the new contracts are already available, right, for all the way through December. So you could go ahead and buy December's futures contract now, but you're going to pay one heck of a premium.
Hello, Market Alchemists, and thank you for watching this video. We hope you enjoyed it.
Please make sure to watch the next episode. And before doing so, like and subscribe.